Still the same situation, plenty of reading. The Dow's off 140, the Nasdaq's down almost 140 points. Mark Mahaney joining us. It's Friday. Mark Mahaney always joins us on Fridays. You just cut your target price on DoorDash from 360 to 300. That's a big cut. What's wrong with DoorDash?
Yes. Well, we also lowered our estimates, so that's part of it. And we've also had a kind of a derating, like multiples have come down in the market, and we have a huge AI unwind, downtrade in the market. I'm going to take the other side on parts of that. But I think that's also, I also want to reflect multiples that are somewhat influenced by the market. It's always that balance of how much of this is your intrinsic view and how much of this you always have to respect the market. So it's a mixture of those things that caused the multiple to come down, and our estimates came down a little bit. Having said all that, I like DoorDash here. Look, we're going through in a major investment cycle. Nobody likes to buy stocks in front of the investment cycle. The good news is that we're already past the initial stages of that. And this is an investment cycle coming from a period of strength. They're doing three things. They're investing in this asset they recently acquired called Deliveroo, which is the DoorDash of Western Europe. And then they're also investing in their tech stack. And finally, in kind of long-term investments in things like autonomous delivery. At some point, robots are driving us around, but at some point, robots will probably also be delivering our meals. And so DoorDash needs to invest in that technology. I think all of these are kind of thoughtful, long-term or medium-term investments. I continue to like the asset. They're the world leader in delivery and a business that's showing increasing free cash flow generation and profitability.
The world leader in delivery. Good stuff. Booking Holdings. You're keeping your price target at $6,250. But everybody knows they're down 25% just this calendar year. So I guess you see this as a buying opportunity.
Yeah, I actually labeled this DHQ. So, I like these dislocated high-quality companies. This stock is traded off aggressively, and it's at a 3-year trough multiple on earnings or EBITDA or cash flow, whatever you want. But it's at a trough multiple, and it's because of these AI fears, the concern, the belief that Gemini or ChatGPT is just going to disrupt businesses like Booking and Expedia and Airbnb. I'm going to take the other side of that. I think in 3 to 5 years, we're going to continue to use Booking more and more. High quality company. They up the dividend. They buy back a lot of stock. I think it's one of the gold standard names especially for GARP and value investors.
We got it. Mark Mahaney on a Friday morning. All good stuff. Thanks very much, Mark. See you again soon.
Thanks, Stu. Have a great weekend.